Hello traders, welcome back to the Forex Geek, where we dive deep into the tool that can help you make smarter trading decisions. In today's video, we are going to be talking about the trading approach that will transform how you view price action, the Renko Day Trading Strategy. You will discover how to spot genuine trends, identify key reversal points, and execute trades with precision using the Renko chart. In the end of today's video, we are going to understand exactly how to implement this strategy in your daily trading routine, from setting up your chart correctly to knowing precisely when to enter and exit the trade. Now, let's understand the basics of the Renko strategy, the Renko chart. Before we dive deep into the strategy, we will need to understand what Renko chart uniquely effective how Renko chart is uniquely effective for daily trading. Unlike your traditional candlestick, the Renko chart creates a uniform blocks or bricks. As you can see, I was trying to set up my Renko chart. Uniform blocks or bricks that can only form when price move in a specific number of pips. That is what the Renko chart is all about. This means that time becomes relevant. Each block represents pure price movement, filtering out the market noise that often leads to false signals. This is the Renko chart. Think of the Renko bricks as building blocks of trends. When you see consecutive green candles, it's weaknesses or it's forming a clear uptrend. Conversely, a series of red bearish candle often leads to a strict signal of strong downtrend. The simplicity is what makes the Renko chart so powerful for daily trading. They show you the market's true direction without the distraction of minor fluctuations. Now, if you want to compare the Renko chart to a normal candlestick, Japanese candlestick chart, you will see there is a clear difference. Let's look at this. Look at the amount of noise in this chart. But when you look at the Renko chart, you see it's just showing you a series of charts of price action in a directional manner. Now, the key to success with the Renko chart lies in selecting the right brick size for your trading pair. For major pairs such as the Euro USD, a 2 pip brick size often works best, while pairs with more volatility like the GBP JPY might require 3 bricks. This calibration ensures you are capturing meaningful price movement while filtering out the market noise. Now that you understand the foundation of the Renko chart, we are ready to explore specific indicators and setup that can give you an edge in the market. Now let's focus on how exactly we can impute or how exactly we can trade using the Renko strategy consistently. Your first step is to set up your Renko chart with 3 consecutive exponential moving average. We have to set up our Renko chart with our exponential moving average. The 12 moving average, the 24 moving average, and the 36 moving average. These EMA work together to identify trend direction and potential reversal points, as you can see from the chart. For optimal results, you would want to trade during the most active market period. So we have to focus on the European section, which opens at the 8 o'clock of the time frame. It opens by 8 a.m. to 11 a.m. That's when we should be focusing on the chart. That is the London time, and the New York trading section from 1 p.m. to 4 p.m. London time. This period typically offers the cleanest price movement and the best trading opportunities. Now for the entry rules for a long position, you wait for the 3 consecutive green Rokyo candle or Rokyo bricks, all above the EMAs. When you see 3 consecutive Rokyo bricks, Renko bricks, all above the 3 EMA, your entry, this confirms that the upward momentum is there, and it also reduces your risk of false breakout. This is where we should enter when we see series of 1, 2, 3 Rokyo candles in upward direction. You put your stop loss just below the last candle. That is how we enter. Then in case of a short entry, we would enter when we see series of 3 consecutive red Rokyo bricks beginning to form below our EMA, and this signifies that we are trading with the trend. So when we see series of 3 Renko candles, we enter at the fourth forming candle, fourth forming brick. Put our stop loss. Remember, the stop loss risk management is very crucial. So we put our stop loss for a long position, we put it at the lowest point. For a long position, we put it at the lowest point of the bricks. Put it at the lowest point of the 3 Renko bricks. While for a short position, we put it at the highest point of the last 3 bricks. Highest point of the last 3 bricks. Take profit should be set in a minimum of 1:2 risk to reward ratio. However, if the market is in a strong trend, you can decide to trail your stop loss behind each new Rokyo brick to maximize your gain. Some advanced traders add Bollinger Band to confirm the velocity, expansion and contraction. When price break out of the band with multiple Rokyo bricks in the same direction, this often signals a strong trend continuation. Now let's look at how we can explore an advanced technique of this strategy to explore how to take your Renko trading to the next level using multi-time frame analysis. While Renko charts are time independent, you can gain significant edge by analyzing different brick size simultaneously. We start by setting up a 3 chart using a 5 pip brick size for major pairs, or sorry about that. This provides a sweet spot between the noise reduction and trading opportunities. Let's get this again. We start by setting up our 3 charts with 3 block sizes. Now let's look at our 3 charts. Remember, we are using multi-time frame analysis right now. The first chart would be your 4-hour time frame, your higher time frame, which is also your higher time frame. Your second chart, or your minimum size time frame, should be your 1 hour, while your small time frame should be your 15 minutes. The large time frame, that's the 15 minutes, the 4-hour time frame, can be used for overall trend direction. Your minimum time frame, that is your 1 hour time frame, can be used for the trend confirmation, while your small time frame, that's your 15 minutes time frame, can be used for entries. Now let's see how we can incorporate this to our trading system. When we want to take a trade, we first of all confirm from the higher time frame if we are in the right direction. Let's say we look at this area of the chart. Let me remove this. We look at this area of the chart, I would mark it out, where we see a series of 3 bullish candle. This signifies that yes, we are in an uptrend. From the higher time frame perspective, we look at our minimum time frame, the 1 hour, to confirm if we are really trending in that direction, and yes, we are trending in that direction. Then we can use the lower time frame to confirm our entry. When we go to the lower time frame, we can see it happens to be a series. It's showing you a lot of price action that took place in the higher time frame. Then we can spot our 3 candle or 3 Renko brick formation to enter a bullish trade in this scenario, since our trend was showing us that we are in a bullish market. So we would enter in such a position after confirming our trend direction, confirm the direction, and we can see our clear entry at this area. So we would enter after we have seen our confirmation of a 3 Renko candle bars. Similarly, we can decide to incorporate the ATR, average true range, by automatically adjust your brick size. If we decide to add the average true range, this will help us to adjust our brick size, and this adaptation helps maintain strategy effectiveness across the market condition. So if we want to enter the time frame, if we want to enter the chart, we can adjust it using the ATR, average true range. This is also an indicator we can use to confirm our entry. Remember, the goal of using multi-time frame is to filter out false signals while catching the strongest trend. When all time frame aligns, you have found a high probability trade opportunity. I repeat, when all time frame align, like we did our 4 hour, our 1 hour, and our 15 minutes all aligned, it means that we have found a high probability trading opportunity. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, share and subscribe, and turn on the notification bell so that you wouldn't miss out on more trading opportunities. Thank you for watching, and I will see you in the next video.